Yo guys, welcome back to the channel. My name is Gideon. If this is your first time here, I'm actually trading Funding Pips Challenge. So I'm documenting the trades I took, and I'm documenting the journey basically and sharing the lessons I'm learning from trading the challenge. So in this video, I'm going to share the lessons that I learned last week and this week with you guys. I'll also show you the trades that I took last week and this week. By the way, I'm up 2% on the challenge. Wow. So let me share some of the lessons that I learned. Then later on in the video, I will show you the trades that I took. I will run through the trades, and then I will show you my dashboard. Finally, I'm going to show you something about Funny Pips that most people are not even aware of. So if you want to see this, stick to the video and let's get started. So last week was a really nice week. We actually went up 3%. I went up 3% and I came back down. I ended last week with 1% profit. So that was really good. It was a nice week. We had so many trading opportunities. We missed some, we entered some. So this week started really bearish, right? So I told you I ended last week with 1% profit, right? This week, the first two trades I took were losses. So I lost the 1% that I made last week. So it was really funny. But after that, I took another trade, and the trade was a 1:5 trade. So it covered up for those two losses, it covered up for the profits and stuff like that. Then I took another trade and I made 1.5%. I made 1.5 R from the trade. Normally that trade would have been a 1:4 trade, but you will see everything when I'm showing you the trade recap. Okay. So the most important part that I want to share with you in this video are the lessons, because we all have different trading strategies, but um, the lessons that you learn are the same. Okay, whether you're trading ICT or I'm trading SMC or I'm trading support and resistance, we all have the same lesson. We're all going to learn similar lessons. Okay, you can use any strategy you like, as long as it has an edge, you are still going to be profitable. So these lessons are very important, and that is why I want to share them with you. Okay, you don't even need to see my trade analysis and everything, but you really need to know these lessons. Okay, so I wrote them down. I'm going to be making reference to the lessons. All right, so the first thing I want to share with you guys is probability. All right, now the reason why I ended this week with 2% profit is because of probability. Okay, like I told you, the first two trades I took this week on Monday were losses. Okay, but despite the fact that they were losses, I still ended up making back profit. So that only goes to show that the trades you will take are not all going to be wins, but if you have a good system and if you believe in probability, you know that not any trade is going to be a win. There's no guarantee that a certain trade is going to be a win. There's a trade I took this week. I would have been up like 3%, okay, or 4%. But there's a trade I took this week, and I was like almost certain that this trade was going to be a win. So I scaled in on the trade. I entered early and I entered again on that trade. And guess what? The trade ended up as a loss. So I lost 1% rather than 0.5% on just that trade. So that was something that made me understand, like, I've read about probability. You've probably read about probability or watched videos about people talking about probability, but if you don't experience it yourself, you won't really understand the importance. Okay, so despite the fact that I understand my strategy, I understand my system, I know what I'm looking for, even though I see everything I'm looking for, that does not guarantee that the trade is going to be a win. So that loss that I took yesterday, that loss that I took yesterday um really emphasized that point in my mind. So one thing I want you to know is that no matter what no matter what you're looking for, if even though you see everything that you are looking for in an A plus setup, that does not guarantee that the trade is going to be a win. So you should still be careful, despite the fact that you might see all the setups. So that's the first lesson I learned this last 2 weeks. All right. The second lesson is candle momentum. Now, this candlestick momentum is what helped me to make that 1.5% that I made last on the account. And it has also helped me last week to prevent loss. All right? And would have helped me to prevent another loss this week, but I guess my my loss aversion basically came into the way. So what happened? What is candlestick momentum? Candlestick momentum is like the way the candle is moving, how fast the candle is moving, what what pattern is the candle giving. Okay, there are different candlestick patterns that you need to know. All right, so when you see a big bullish candle with very small wicks below it and small wicks above it, that is telling you that the buyers are taking the price aggressively to the upside. Same thing if you see a big bearish candle with small wicks above and below it, it tells you that the sellers are entering the market with aggressive, they are very aggressive. But what if you see a bullish candle with very big wick above it? Even though the bullish candle is big, but you see a very long wick at the top, it means that bulls are still in the market, but sellers or bears have taken the market down, right? So if you see a long wick at the top, that could be an indication that the market wants to start moving back. What about if you just took a sell trade now, and the trade start moving in your favor, but instantly you now see a very big bullish candle that engulfs like two, three bearish candles? That should tell you that buyers are stepping into the market at that point. And immediately you see something like that, you should close the trade, because for buyers to push the market like that, it shows that probably the sellers are losing their strength. So you need to watch out for candlestick momentum. I know that explain it like this, you might not really understand it, but I want you to go and do your own research, study candlestick momentum, add it to your own strategy, because it will really, really assist you. So the next thing I want to tell you guys is to be patient. Patient with your setup, patient while you're in a trade, patient when you're waiting for a setup to show up. Okay, sometimes like last week after I closed my trade, I was up 3% and then I lost 2%. I lost four trades in a row. Okay, so from being up 3%, I lost 0.5, 0.5, four times in a row. So on Friday, I was eagerly looking for another trade. So I just um so like I could not even hold myself. I had to shut down my phone so that I would just stop trading for that day and end the week with 1% profit. So that goes to show that when we lose, because the way we are all human. So losing will actually make you feel like you have lost something very, very important. Like you have to get it back immediately. But that is the wrong way to think when you are trading. Rather, you should understand that there are endless opportunities in the market. So you need patience to wait for another setup to show up. Okay? Even when, let's say you have analyzed the chart now and then you place a buy limit or a sell limit, you still need patience to wait and trust your analysis that okay, it's going to get there. What happened to me um on Tuesday? What happened to me on Tuesday is that I placed a sell limit, right? I was expecting price to get to that sell limit and then start selling. But guess what price did? Price got very close to my limit order, like 2 pips. Okay, I was not in the market. I've already set the sell limit, so I just closed the chart and I was doing something else. When I came back, I saw that price has gotten just 2 pips to the sell limit and reversed, like pushed down in a 1 hour time frame. And I was like, damn, should I let this trade run without me? Right? So I decided to jump in. Okay. So I decided to use market order and just enter the trade like that. Even though my risk to reward ratio was now screwed up, but I still entered that trade. So what ended up happening is that after I entered the trade, the market went back up, triggered that sell limit order that I placed first, and then it was now pushing down in the direction. But guess what? I now had two trades that I was risking in that market. And what I failed to do is that I failed to close that first trade. Why? Because I saw it moving in my direction and I was like, oh, thank God, right? I believe that I was right. I was holding on to I was holding up to my analysis that okay, since I believe it's going to go down, it's going to go down. But that is the wrong thing to do. Remember probability. right? Even though the probability of this thing happening, of it going down, is high, there's still likelihood that it will go up. So I should have not over risked on that one. So what am I trying to say is be patient. If you place a sell limit order, now this is me included. If I place a sell limit order and it has not gotten to that limit order, I should not jump in at a random price. Allow the market to do what it wants to do. If your strategy is right, it will still trigger you in and it will still move in your direction. So you need to be patient when you're waiting for your trade to be triggered. Then another thing again is to be patient when the trade is on. So now whenever I place a trade, okay, my trade usually lasts like maybe 1 day or 1 day and or 2 days sometimes. So it takes patience to wait for the trade to play out. It takes patience. If you're not patient, if you're not patient, your trade will not play out. It won't play out. So you need to be patient. After, after taking a loss, you need to be patient and know that there are opportunities in the market. After taking, after placing your limit order, you need to be patient for the market to trigger it. And after the market has triggered your limit order, you need to be patient for the market to either hit your stop loss or move in your direction. So guys, I hope these three tips are helpful, right? Probability, candle momentum, and patience. Very, very important things. So by the way, guys, if you are enjoying this video so far, make sure that you hit that subscribe button. If you check my channel right now, I have like 455 subscribers. So I need your help to get to 500 subscribers. So please hit that subscribe button. Let me hit my goal of 500 subscribers. So my goal right now is to get to 500 subscribers. So hit that subscribe button. In this channel, what I do is I document my trading, right, and my trading lessons. So if I trade, I'll come here and I'll share the lessons that I learned with you guys, and I'll also share the trades I took with you guys. So if this is something you want to see, make sure that you subscribe to the channel and give this video a like if you're enjoying it so far. So right now, I've shared the lesson that I learned last week and last 2 weeks for you guys. So let's now go to my phone. Let me go into my phone and share the trades that I took with you guys, the exact trades I took, so that you can basically see everything. Then I'll show you my dashboard, and I will tell you that thing I said I'm going to tell you about funding pips that most people are not aware of. So if you want to see that, let's go into the phone.
So guys, I was unable to make a video last week to document the my trading journey, but this is basically what happened. This was last week, so you can see from on the 20th to 24th, Monday to Friday of last week. And as you can see, we made $55, which is 1% on the account. This is me risking 0.5%, and right here I was risking 0.3%. Okay, so this trade was like 1:3 or 1:4. This particular trade. So I was risking 0.3%, and that last week I decided to increase my risk. So as you can see, I started to increase my risk here, and I started risking 0.5% per trade. So this one was because of slippage. This one's maybe because of the fee and all. So I reduced the risk. So basically, these are the trades I took. So let me show you the trade, the before and after of each trade. So this first trade was just a test trade, because I thought that there was no, like I thought there was no trading that day. So I just took this trade to check if the market was open. So this GBP trade, let me show you the trade. So this was my trade on GBP and as you can see, it was a limit order. I was using this I think I was using the 1 hour supply zone. Yes. So I was using this 1 hour supply zone, as you can see right here. I just used the entire 1 hour zone, and it's just a simple break and retest, right? It just broke structure to the downside and retested it, so I entered, right? So as you can see right here, I scaled into the trade. I entered again. This one was like 1:1.5, so I just scaled in because I love the bearish pressure, right? The way it was moving down, I just love everything about that trade. So after I scaled in, it kept going, kept going. So the market just kept going down, which was beautiful. and as you can see, that next hour it just spiked down. Wow, this was a really good trade. Okay, so that was the first trade for on Monday last 2 weeks. That was the first trade. I mean last week, in fact. So the next trade I took was on Euro AUD right here. This was the trade, and this trade ended up as break even. So let me show you how the trade played out. So this was trade number 2 on the account, and as you can see, the same concept. I saw this small break of structure here, and I saw this supply zone here, and that was my reason for entry. And also, if you look at this place here, it looks like there's a break of structure here, and it looks as if it was reacting from this level here. So that's why I set a limit order at this point, and as it went there, it triggered me in, and I was aiming for the lows, right? But it got to this point, and then I even reduced my targets to this level here. But and after I got to this point, I placed my trade at break even so that I would protect my account. So after I did that, you can see the market started to show some little rejections at the downside, and this was telling me that this thing might reverse, this thing might reverse. So you can see it was looking nice as if it wants to go down, and it started going up. And as you can see, the market just reversed and stopped me out at break even. So I took this next trade on the account. As you can see, this one here, this is the third trade, which is AUDJPY. So let me show you how AUDJPY played out. As you can see also, it was break even. So let me show you the trade. So as you can see, this was the AUDJPY trade, and this trade I wasn't really sure, but because this supply zone was looking like, this supply zone looked as if it was already mitigated, as you can see right there. So I wasn't really sure, but I saw this break of structure here, and I was still contemplating it. Should I use this low or this other low? So the trade was not really, I was not really certain for this trade, but I took it anyway. And as I entered, I closed it, right? So that was it. So I didn't really hold that trade for long. So that was the AUDJPY trade. So as you can see, the next thing I took on the account was on this USD JPY trade. You can see that there were two trades there. So I'm going to tell you what happened here. As you can see, this is the USD JPY trade. I entered this trade for a sell because I saw a break of structure here and a supply zone here. So after I entered the trade, I scaled into this trade by entering another trade right there. So the market kept moving in our direction. So as you can see, the market moved in our direction. So once it got to this level here, what I did was I placed the trade at break even. So when this candle just spiked up, this bullish candle, once it just spiked up, it took us out for break even, and that was the trade, right? That was the reason why we ended that trade as break even. So the next trade we took on the account last week was this one on Euro GBP. So let me show you how the trade played out. So guys, as you can see on this Euro GBP, from the daily time frame, it was looking bullish. So I just took the trade. I think I used this 2-hour time frame to, because I saw this break of structure here. I was thinking that it was going to go down, but looking at the daily time frame now, I can see the mistake I made because it's clearly bullish, right? So there's no need for me looking for sells here. Anyways, I closed the trade early, and that was the. I didn't like to move. I just closed the trade because I immediately changed my buyers after entering the trade. After that Euro GBP trade, I took another trade on GBP NZD, as you can see right here. The trade also ended up as a loss. Then I took another trade on Euro JPY. This was two trades. So let me show you this. These are two trades right here. This GBP NZD and Euro JPY. So as you can see, this is the trade I took on GBP NZD. It was a buy trade. It's very simple stuff, but it ended up as a loss as well. So as you can see, then the Euro JPY trade. So this was the trade on Euro JPY. As you can see, it's just a break and retest of the demand zone. This demand zone right here, I was expecting to enter and then push up, but as you can see, okay, so what happened on this trade, right? This was the original analysis for this trade. No, this was not the original analysis. This demand zone was the zone I was waiting to enter. Then I scaled into this 15 minutes time frame. As you can see, I scaled in. So as you can see, you can see the zone below. That last zone was the zone I was aiming to enter. But I now scaled into the 15 minutes time frame, and I wanted to just rush and enter. I did not wait for it to get to this second zone. So I took two trades here. As you can see, there are two trades that I took here. And that's why you see those two losses. So when it finally got to this demand zone, I already took two losses on Euro JPY. So I did not want to enter again. But as you can see, it later respected that demand zone. You can see after entering the demand, it just started going back up. Anyways, I took those two losses, so I didn't even bother to look at it anymore. So the last trades that I took last week was on USD JPY. So you can see I wanted to enter two trades, but I ended up closing one. So I entered this one trade, risking 0.5%. So let me show you the trade. So I entered for a buy using this demand here, demand here, but I failed to look at the bigger picture, right? So if you look at this bigger picture right here, we have this higher low, higher high right there. So we had this extreme demand zone, as you can see here. So I was using this inner zone right here. And normally I shouldn't be doing this. Rather, what I should have done is use the FIB tool to see the premium and discount zones, right? So if you use your FIB tool and check this trade, you see that this area was actually a premium zone. So I shouldn't have been buying at this level. Rather, I should have waited for it to get to this discount demand zone before I'd buy. Anyways, so that was the trade I took last week. Okay, so let me show you the trades I took this week very fast. So as you can see, this week I actually took 6 setups from this trade. But if you are looking at my chart right here, you will see 7 trades. Now the reason why is because I took these 2 trades for just one setup. I scaled in on one setup and it ended up as a loss. So the first trade I took was on USD JPY. As you can see here, I reached 0.5%. So let me show you the trade. The first 3 trades I took on the account, same concept, and break of structure and then pull back to demand zone, right? So it broke structure here, you can see, and then we had this demand zone here. So the market came to that demand zone and started moving in our favor. So this was Euro JPY. Then USD JPY, same thing. The market broke structure here, came back to this demand zone, and then I entered also in GBP JPY. So you can see break of structure again and then demand zone. But one mistake I made is forgetting that these are correlated pairs. So if anything happens, let's assume now that something happens in Japan, okay, and that makes JPY to be bullish. All of these pairs are going to go down immediately, right? All these pairs will likely go down. So if something very very big happens in Japan now, all these trades will be affected. So it's like another factor of risk that we need to keep in mind when trading. Correlated pairs, although some people will say you want to use correlated pairs as a confluence for your entry. No, don't do that. You just look for your setup, because the different pairs have different reason for movement, right? But again, it's still a factor of risk, so you should be careful with it. Anyways, the 3 trades ended up as losses. So you can see this Euro JPY trade, you can see it just moved down. Then you see this is the USD JPY trade, it also moved down, right? Then this is the GP trade. So when I saw these 2 trades as losses, I just closed this one. Now um one thing about this kind of move is it gives you an understanding of where the price is going to move to. So as you later see, this helped me to make profit right from the market. So I took this one loss to understand the direction of the market. So this is telling me now that USD JPY wants to sell, right? So as you further see, I now took this next trade. So after that sell, you can see this is where I bought, and then the market pushed down. Let me show you from my trading journal, right? So you can see I bought here, the market pushed down. So that told me that the market wants to start going. So I wants to start pushing down, right? So I started looking for sell, and as you can see right in the 1 hour time frame, we have this extreme demand zone. So I marked out that demand zone, placed my sell limit order, as you can see here, and just took this path, this beautiful trade. As you can see, this is sniper entry. Look at it, not even up to 1 or 2 pips. It just tapped me in and started to move in the direction, in the perfect direction. So that was when I was doing screen recording while the trade was moving. So as you can just see, beautiful, beautiful trade. It just kept going, kept going, kept going. Okay, yeah, look at the trade. Monday evening. This was Monday evening. After stopping me out, I reanalyzed the chart and I saw that okay, we have a break of structure here, and then we have the supply zone. So this then I took this USD CHF trade. Okay, I took this trade on USD CHF on the account. So as you can see, um, yes, this was the trade I was telling you about, that it got very close to my sell limit. As you can see, I placed my sell limit just below that supply zone, right? Then USDCHF got very close to that zone, but it did not trigger my trade. I don't know why. So I just jumped in, because from the way you are seeing the market, right, you see that the previous candle ended up as a what? As a bearish pin bar. Is this a bullish pin bar? I don't even know. But you can see those wicks at the top. The wick is telling me that there is selling pressure coming into the market. And then this other 1 hour candle was now pushing down. So I just jumped in, and later on you can see that my sell limit order was now activated. This was it when it was activated, and basically it just, at first it moved deep into the supply zone as if it wanted to stop me out, but it did not stop me out. So I was here now risking two positions, right? This USD JPY and USD CHF. So this is how the USD JPY trade played out. It was actually a 1:7 hour trade. Wow, beautiful. Beautiful trade, honestly. So this was, yeah, you can see. So the first trade, which is this one, was a 7.9 hour trade, but I closed it at 5 hour because of the way it was moving. Then I saw this other one. If I had entered, like you can see this break of structure here, this supply zone here. So if I'd entered, this one would have given me 6 hour just from entry to this point here. It would have given me 6 hour. But anyways, we can leave that for next time, right? So this was how, where I closed the trade. It was just a 5 hour trade. I closed it because of the way this market was giving us wicks down here. So I just closed it, and this was the USD CHF trade. Now, one thing about this USD CHF trade where I made mistake, and that is one lesson I told you guys about momentum. Remember momentum. You can see the way this candle is going up now, right? This is an indication that buyers are stepping back into the market. So at this point, I should have scaled out. I should have placed my trade at break even, or just close the trade entirely. But I was so invested in the idea that it was going to go down, as you can see by that arrow there, that I failed to see that bullish momentum. Even after it closed, I failed to see it, that this thing wants to close me out of this trade. Anyways, that was the loss on the account. So you can see this one. So this was the last trade I took this week on USD card. So this trade was I placed this trade at night, and then when I woke up in the morning, I saw that it had been triggered and it was already going in my direction. So you can see it had already moved 4 hour. Like this was the trade right here. You can see the trade before. This was the before and this was after, right? So before it played out, I'd already set my limit order and everything. You can see break of structure, demand zone, everything was there. So this morning I woke up and I saw it like this. Very beautiful, right? It triggered the trade at night and then started moving in our direction. So it gave me 4 hour, but I after I gave me that 4 hour, you can see this big bearish engulfing candle. So this is the momentum I'm telling you guys about, right? You can see only these bearish candles engulfed 1, 2, 3, 4, 5, 6 candles. Only this one. So that is telling us that there's bearish pressure coming into the market. So that's why I closed the trade at 1.5 hour. Okay, so I just closed the trade, and that was all for the week.
Wow!
So now let me show you my dashboard. Let's go to my, and let me show you our balance. So as you can see, this is my dashboard, and this is my for this week. So this is my funding pips dashboard, as you can see right here. So if we go to custom and we choose this week, this is how we performed this week. Okay, then if we, let me show you last week performance so that you see it. So this was last week's performance. You can see we got up 3%. We made it 3% on the account, and then brought it back to 1%. Okay, let me show you 19 to 24. Okay, good. So you can see we made 3%, and then we managed to bring it back to I don't know why this is not updating. So this was the, so basically this year January, this January has been a very profitable very profitable month on the account. Okay, so guys, as you can see, very soon the target, so let's go to the targets. As you can see, the target is $400, and now we are left with like $300 to make. We have made $100, which is 25% of the target. You can see everything. My win rate 40%, average win 23, average loss 12. So you can see that my average win is like double of my average loss, but this thing is not so accurate because of break even and the rest. Anyways, you can see the profit factor and everything. So very soon we are going to pass this challenge, and I'm very confident that very soon I'm going to pass this challenge. So if you want to get your own funding pips challenge, right, most people are not aware of this, but you can actually buy funding pips at a cheaper price by using the discount link in the description of this video. You're going to get any funding pips challenge you buy, you can buy it at 5% discount. Okay, so one of the reasons why I like funding pips is because they are cheap, right? They are very cheap, and their Discord is very lively. Their support on Discord is very helpful. Let me show you their Discord channel. So you can see this is their Discord channel, right? You can see, so their support, this their moderator and their support, they are really really helpful. People are asking questions. Like there's one time I was having a question and I just asked, and within a few minutes they answered me on this their Discord channel. So if you want to buy a challenge from Funding Pips, use the link in the description. You get 5% discount from your challenge. Despite the fact that Funding Pips is cheap, you can get it at a cheaper rate using that link in the description of this video. So that's it for this video. It's already 10 p.m. I need to go and sleep. So guys, don't forget, if you have not subscribed to this channel, biko subscribe. I'm trying to hit 500 subscribers. Please support me and subscribe to the channel. Let's do this, guys. Let's do this. Support. Oh yeah, yeah, yeah. Subscribe if you have not subscribed already. Thank you for watching. Give this video a like. Let me know how your week went. Let me know how January trading has been for you in the comment section. Let's chat. All right, see you in another video.